Houston, very nice. Hey, Donnet from Houston. Well, Eric is actually in Dallas. Very nice. Love my King investment. Yes, I love my King investment. Yeah, very good. Very good. Um, and Liz is from Phoenix, Arizona. Gosh, I love that area. I have a favorite resort. I think it's Scottsdale. Yeah, I think it's Scottsdale. I just love to just hang out. um, Houston, a lot of Texas. I promise the next state I move is going to be Texas.
It's great here. You should come. It's no state
So
tax.
yeah, slow and steady wins. Absolutely, slow and steady wins. I agree. Like that wins the game, right, Leah? Um, so Eric, while people are coming in, we're gonna give it a couple more minutes. What do you like? How do you like Dallas? I was fascinated. I was in Dallas in November, first time visiting Dallas. How do you like Dallas you're in San Diego, right? Orange
I
County.
was in San Diego for a year and a half, La Jolla for 5 years, and then
Uh,
LA for 13 years. I hated LA the entire time I lived there. No offense to anyone there. It's just I'm a
yeah.
Midwesterner by nature. I like Dallas. It's simple living.
Hmm.
Everything is was never closed during COVID, which is great. The economy here is growing dramatically. The real estate market here is a little bit bonkers at this moment, but I love Dallas. It's more of a family-oriented place than anywhere I've ever lived. I live 40 minutes north of the city, so I'm right in between Dallas and Oklahoma. But I love it. It kind of goes back to my old Midwestern roots, just simple living and good people.
I know, isn't that amazing how we go back, um, go back in time and we find that's really much more exciting than, coming all technology and, all digital. So very
Yeah.
interesting. So welcome, welcome. I know it's 9:01 or, we're going to give it a couple more minutes for the people who are coming in. If you're coming in right now, if you want to jot down, how's your day? Just give us something interesting that you have to share. I love people. I had an adjustment done at a chiropractor earlier this morning, and they had the messaging for every person that would go walk in the room. They had a little message outside. That was so neat. That was just so nice to have a message for the people. And that one was just love your enemies. But we're not gonna get there today. But so anything that you want to share with us? I know everybody's trying to learn something. It is, tax and investments are pretty heavy. So let's have some fun and enjoy this session that we have together. Investing in land development in Texas. Love it. Great road. Absolutely love it. So I think we should get started, Eric,
Let's do
just
it.
to make sure that we have, all of this. If you're coming in, we will have a replay. If that's the question, we'll have a replay that goes out probably in a couple of days. You will get the replay if you signed up. Um, and I want to say thank you for coming and thank you for joining us. Probably should stop the music. That would be a very good idea. Okay, so let's get that out. Okay, so everybody can hear me and can hear Eric, right? Just give me a thumbs up or a yes in the comments if everything looks good. Um, very nice. Thank you, Eric. Very good. So, well, thank you so much for joining us. We decided to have this session really from coming from our clients asking a lot of questions when we presented, tax strategies. And tax strategy, many times, I kind of step back a little bit. People come and just ask for the strategies. And sometimes we just need to decide, why do we need the strategies for? What are you trying to eliminate? Because if you're trying to eliminate your what kind of income, ordinary income, capital gains income. So it's really a great question. What are you trying to accomplish? What's the goal that we're trying to accomplish with tax planning? So once we decide, typically in tax planning, we go and we cover some types of investments, because who needs tax planning most of the times has excess income over their the standard living. So I'll give you an example. If your lifestyle cost you $100,000 and you produce $200,000 in a year, that means you have that access, you have that delta for $100,000. And you can do some tax strategies, which are great. And we have numerous tax strategies that work, depending if you're an employee or a business owner, more of a business owner. right? But if you, many times we have to go towards investments. And one of the investments that reduces this income, could it be ordinary income, which that's why oil and gas is so great. And like not just oil and gas, energy, right? Right now, energy, different types of energy. So today we're going to really talk about oil and gas, which is type of an energy investment, really reduces that ordinary income. So I'll give you an example. Let's say you are, an employee or have a small business, and you have $100,000 in wages, another $100,000 from your business. So your income is $200,000. I'll give you an example. What does it mean that it reduces? Oil and gas can actually reduce that income. And Eric's going to talk a little bit about how it works, because I see a lot of people kind of pushing back saying, oh, I heard so many stories. We've had my mom invested, my dad has this story, my uncle, like they have all the stories that they collected about like energy and oil and gas. And a lot of people push back. And the funniest thing is, I see we have a lot of Texas people. Most of my Texas clients push back to oil and gas. So what's up with that? I don't know what happened in Texas, right? All these years. But I want to explore. So I want to introduce you to Eric. So, Eric, that's his powerhouse, right? In the oil and gas. And what we do on our side is just tax planning. And we're really bringing all the investors or the other people alongside to help you put your money to use to reduce your tax bill. So that's really what we do in a nutshell, right? And if you hear me, I see a lot of common faces and common names here. If you don't know me, I am Laura. I am a CPA. I run a CPA firm, my CPA Pro, where we really specialize in big picture tax planning. And we connect the dots between having just entities, just having a small business, and having all this income, doing tax strategy. So we combine all of that into a tax plan where we work with your estate attorney to make sure your trusts are in place. We work with your investment advisors to make sure the investments are actually working for you. And we create a tax strategy in the back end. And that's about that. So, I think we lost Eric. Oh, here he is. Yeah. So, I will introduce Eric because he is going to help us understand a little bit more detail the oil and gas industry and all of that. And Eric Rice, he's the Chief Growth Officer of King Operating Corporation. Like Leah just mentioned that she loves her investment with King Operations. He started his career in Chicago in a wealth management firm for high net worth individuals before spending almost about 2 decades building his own businesses. Along the way, he worked with founders across multiple sectors to create profitable, enduring enterprises, demonstrating a keen eye for the nuances of markets and corresponding growth opportunities. His real-world market experience has made him a sought-after partner for entrepreneurs and investors around the globe. And he, as we mentioned, he lives in Dallas, which is a lot of Utes in the neck of your woods. And he has, along with his wife and his 2 kids, where he runs his part-time ministry and coaches baseball in his free time. That's such an amazing like life legacy. So let's welcome Eric. Say, everybody, if you are here and you know or heard about Eric, can you just say in the comments, can you say, go Eric? Can you do that for me?
Well, I'm a nobody in the grand
No,
scheme of
if you
things.
guys are
So
no, so no, listen, it's go Eric. So listen, it's so interesting that there's no such thing as nobody. Like what you are creating is very inspiring. And Elizabeth, there's always people, but we always have a fan base out there. You just have to find it. So guys, let's welcome Eric. And Eric, you have the floor to kind of walk us through what you kind of the market outlook and all of that. And would love to be here. I might interject on and off, but yeah, you have the
sure,
floor.
sure. Well, thank you so much, Laura. It's great to be here with you guys today. Going from here right to the Super Doug conference in Fort Worth. So busy day of speaking. Right now, there's a lot of warranted fear in the world. And in many cases, I think there's not enough fear in the world. I think that right now, we can just look at basic things that I've seen in the macro environment in the last 2 days. Copper is at an all-time high. I don't think people realize how important copper is. I don't think they realize exactly how difficult it is to mine copper. It takes 12 to 15 years to start mining after you get through regulations and building. We have that happening. We have credit card debt at an all-time high. We have wages moving stagnantly across the country. We have inflation that's being lied about. I'm sorry if that offends some of you who trust the government, but that's their bold-faced lies. We're actually at 23% inflation if you look at numbers that were used just 5 years ago. And we have all-time highs in the Nasdaq and the Dow Jones and the S&P 500. This is a very strange, peculiar time. I believe what we're watching right now is if you've ever been in a vehicle and the vehicle has a mechanical problem, and like when I was younger, I wouldn't have money to fix my car, so I would just keep driving it. And eventually all the lights would pop up on my dashboard and then the car would stop. And I think what we're watching in the economy right now is all the lights coming on. You're low on air pressure, your brakes aren't working, your transmission's going out. And I think a lot of people are glancing over it because they watch the stock market as an indicator for the economy. The stock market's doing great. It's not a reflection of the economy. A reflection of the true economy is going to come in supply and demand of natural goods and commodities, metals, oil, any energy, natural gas, all these things that we don't pay attention to, right? Like we had Barack Obama for 8 years telling people not to buy gold because it was a barbarous relic. Well, gold has outperformed U.S. Treasuries by 170% in the last 3 years. 170%. It's outperformed U.S. Treasuries. Just as safe, probably much safer. And when we talk about the energy world, it's important to understand the role of energy, because I think that over the last 30 years, we've become very desensitized to supply chains, to source materials. I think that a lot of us just wake up in the morning and assume that these phones make themselves and that plastic comes from the air and glass doesn't come from sand and wires don't come from copper. But that is really the main issue that people aren't watching. They're watching the surface level stock market and not paying attention to the core economic principles, which are always energy first. Nations, it doesn't matter how wealthy a nation is with money, it's how wealthy a nation is with power, with energy. All wars have been fought over power. And right now we're finding ourselves in a very depleted state of supply that, again, is not being truthful when it's being told by the EIA. I'm, as you can tell, Laura, I'm probably on many watch lists from government agencies because I will continually look at facts and report the facts to people. It's a pathway. I'm a believer. I believe you get to heaven by telling the truth. And in this process, what we're watching is a nation that has no clue what's happening to them right now. I can get into the geopolitics later, but just from a basic standpoint of understanding where we are, we're being told that we're producing more oil than ever before in this country, yet we have 48 less rigs on the market. So you have to look at facts versus propaganda. And the propaganda is to get you to lull you to sleep and say everything's fine. But in California, you guys are paying $7.50 a gallon for gas. That's something you can't avoid. And the reason is that we're actually not drilling as much oil here. Russia has dropped their oil reserves. They're planning on dropping 9 million barrels per day. And to give you an estimate of how that works, we're looking at right now by 2030 a demand of 140 million barrels of oil per day. And right now we produce about 99. So that sort of gap is one that you can't replace. People are talking, well, electric cars will replace it. Well, it takes 600 to 800 barrels of oil just to make the battery in an electric vehicle. 600 to 800 barrels, a full day's production for a really good well is what's required to make one Tesla battery, just one. Cobalt, lithium, all these products require diesel fuel to mine. You cannot mine with an electric vehicle. There's not enough weight, torque, or energy. And in this process, we're starting to see nations that are, I've been calling this for a while. This summer, you will see what's called the weaponization of energy. So energy exporters like Saudi Arabia, OPEC, OPEC Plus, Russia, these nations, they will begin to slowly and then quickly reduce their supply that they offer as an export. This is going to drive up prices. I called last year that by the end of 2024, we would see $10 gas and 10% mortgages, and I'm still confident in that projection. It's not a good one. That's not one I like to share with people, but it's the truth. And in this macro environment, not only do you have lower wages, more debt, higher interest rates, you also have a government that's starting to overtax 44% on capital gains. They just passed a 66% capital gains tax in Canada. These things are mounting efforts of tyranny. This is how you would eliminate the upper, middle, and lower middle class. And those are generally the drivers of free nations. So in an environment like we're in right now, it's important to explore energy as part of your portfolio. I'll go ahead and throw it out there. My portfolio, my personal portfolio for the last 2 years has consisted of the following things only. There is one deviation. I'm buying the VIX right now. I think everyone should buy the VIX. If you have a commodities broker, buy the VIX. It's a volatility index, and it's as low as it's been in 10 years. And volatility is coming. I have absolutely dedicated a disciplined approach in my portfolio to gold, silver, raw land, no real estate, just land, oil and gas, and Bitcoin. That's all I've put my money into, and I've outpaced every portfolio manager in the country. So when we look at that allocation, I think everyone should have a piece of each of those. Raw land has many things. If you have trees on it, you can sell the timber. You can monetize raw land 1,000 times over. It's not just buy and hold and wait for a shopping center 10 years down the road. Of course, that's a big return. Gold has again outperformed U.S. Treasuries in the last 3 years by 170%. Silver is about to run. It's now at almost $30 an ounce. Its all-time high is 48. Silver is used in everything, every cell phone, car, vehicle, radio, has industrial and monetary value. All precious metals, to be honest, with all metals that require diesel fuel to mine are precious. Because in today's world, we use a lot of energy. People aren't understanding as I get into oil and gas, they don't understand that the first of all, the cloud is an illusion. The cloud is just somebody else's server. That's all the cloud is. It's not a mystical, magical cloud in the sky. It's just someone else's server. And those servers require a lot of energy. To operate our phones in the cloud by itself requires 2 times the GDP of the nation of Japan. That's just for the cloud for computing. That's it. And that's going to be tripled in the next 3 years with AI and quantum computing coming online. These are massive drains of energy. And I'm a Bitcoiner, so I'm big into energy. You have to understand energy to understand mining Bitcoin, which is a whole different topic. But in the oil and gas space, we have a massive global deficiency. We have nations that are shutting off borders, cutting off exports, stopping using the US dollar. That's something that's never talked about on the mainstream media. Right now, 50% of the nations around the world are buying their oil in local currency, or they're buying their oil in the yuan from China. So we have the BRICS nations that are de-dollarizing us. So we have a lot of things going against us as Americans. But the one thing that we have here is the most abundant resourced land that God ever created. It never gets any credit for it because we're a first world nation. But we have more oil underneath our feet than anywhere else in the world. Between Alaska and Texas, you can power every car, every building, every electrical center, every airplane for the next 600 years. 600 years. There's that much oil here, but we restrict ourselves from buying it or from drilling it so that we buy it from foreign nations to create a global chain of economy, which is breaking down. Now, in this space, it's important to understand that there is and there should be hesitation behind many oil and gas deals. There should be. So in Texas, there was, I'm not new here, I guess, at this point. I've been here for almost 4 years. I've done some deep studying of the history behind oil and gas in the state. And for most of the state, most of the phone calls people get from strangers that sold them into a deal are for what's called wildcatting wellbore only deals. These are deals where they're buying very cheap land, raising a lot of money. Their plan is to drill 3 wells, prove the land, and sell the land so that the oil and gas company makes the profit, whereas the investor actually just gets an income stream. Now, if one of those 3 wells folds and doesn't produce oil, the deal is done. There's no profit in it. So many people have lost money on wildcat oil and gas deals. And to be frank with you, our firm did wildcat oil and gas deals for about 18 years. And in 2017, we changed our model, or 2015, we changed our model. So now our investors own the leases with us, which is really what kind of adds some security to an investment in the end. So we'll go through some due diligence items to look through in oil and gas, but it's important to understand that as a position in your portfolio, energy needs to be there. You don't want to go to where the crowd already is. You want to go to where the crowd is going in the future. And the crowd is starting to flood into metals, definitely flooding into Bitcoin, definitely coming into raw land. It's the most finite commodity on planet Earth. God only made so much land. Buy as much as you can. And of course, you have to pay taxes on it, but it's relatively cheap. Now, when you get into other resources that are scarce, because environmentalism has created scarcity. So while most people support the move for environmental changes, what they're not realizing is every vote for environmental changes, which are negligent at best. I mean, the actual science behind climate change does not exist. It's an opinion of the future. And every time a decision is made for environmental policy, it costs you more money, period. So if you're not mining copper because you don't want to release carbon into the air that plants absorb naturally and turn into biomass, then you are going to raise the price of everything that you purchase, and ultimately will be poor, and the environment will still be just as bad. That's really the end agenda. Now, in the oil and gas space, the thing about oil and gas that's really unique is the fact that it has multiple pathways. So as part of your portfolio, you could certainly look into Shell or any of these large publicly traded companies and make an investment there. It's a one-to-one calibration. So you're making an investment in a company that drills oil, and your return is based on the performance of the company, not the price of oil. You also are putting money in, hoping to pull it out worth more, right? So there's definitely a risk in a stock. Or if they're paying a dividend, you're getting dividends, and that's a good play, but there's no tax advantage. So it's important to understand the multiple prongs of different types of investments, because we're not living in a one-to-one facilitated environment. We're being attacked on all sides. The price of everything is going up, the commodities are being drained, taxes are going up, and wages are not climbing as fast as taxes, and inflation is chewing away at everything. So how do you fight off inflation, taxes, and prepare yourself for a bad economy? You look for things that reduce your tax burden, provide an income, and the possibility of a multiple or an increase of wealth. So the second path that you can look at is land rights or mineral rights. So you can certainly go to a private rancher who has hundreds of thousands of acres, and there's minerals and there's oil and there's gas there, and some science has been done, and you can buy into their land, and you can get paid on every barrel of oil that's drilled by an operator when they come on the land. It does have an additional risk because you don't know if they're going to have an operator, and you don't know how good that operator is going to be. But nonetheless, if they procure and produce and sell minerals on that property, you will get paid. Again, no tax advantage. The third way to invest in oil and gas is through private deals, like I do here at King. So these private deals are essentially partnerships. So you invest with a company. You're not investing in the company. You're investing with them in a partnership for a piece of land that has geological research that you're going to drill on. And then you actually are a partner in the revenue share of the oil sales stream. Which, by the way, don't overlook natural gas. I think natural gas is going to hit $5 by the end of the year. I think we'll have a cold winter. I think we're going to have a lot of problems in the summer. Natural gas is used for air conditioning. So I think we're going to see some rotating heat and cold areas. So you want to look for projects that offer you a three-pronged approach, which is why I came to King in the first place. 100% tax reduction for your investment, so you lower your taxation. It actually reduces your risk in the investment, so the cash-on-cash return from the tax advantage is absolutely number one paramount. So one thing you can lock in, and it'll reduce your exposure in the investment by about 30% just from the major tax advantage on a cash basis. Then we produce monthly passive income, which sometimes is good, sometimes is bad. It depends on the price of oil and how much production we have. And you're an owner in the leases. So if our land turns out to be very valuable to a new developer in the future, then we'll sell it at a profit and everyone makes money from it. So the three ways you can invest in oil and gas, you could certainly get into the futures market, but if you're not a futures trader and don't have deep experience doing it, they'd love for you guys to come in and they will torture you to death with longs and shorts all day long until you're out of the business. I don't advise that for individuals. I've been on the other side of the wolf side of Wall Street, and they certainly love newcomers who want to just play the price of oil. The best way to pay the price of oil is to get into private partnerships with capital advantages through tax savings and through monthly passive income. But it's important to understand it does need to be a part of your portfolio. So if you're afraid to do a private deal, which many have folded, there's no way around that. Many have certainly been bad deals for people in the past. I would look into the Railroad Commission. So anybody talking to you about oil and gas deals, look them up on the Railroad Commission, find out how long they've been in business, how many wells they have. It's all public disclosure. We're required to do it. I would visit the company, or I would get on a Zoom and see their office. A lot of times you'll find oil and gas deals are a bunch of people who work at home, which I'm working at home right now before I go. Normally I'm in an office every day, but I'm on a traveling trip here for a conference later. And this is my podcast studio in my house, so that's why I have the weird light up there. But at the same time, you want to do some due diligence, understand that there's a real team there, that they have legal, that they have financial, that they have a staff of engineers, not just one person. That's a lot of times what I've seen in the past of people who've been burned on oil and gas deals. There are a bunch of work-at-home salespeople raising money for an operation that's one or two people that are going to outsource everything, and outsourcing has its definite problems in every business. So make sure you look up the Railroad Commission. That's super important to be able to have. Ask for a record of their track record. One thing I'll tell you right now is oil and gas is not a guarantee in any manner. You are drilling 10,000, 12,000 feet below the surface of the earth where literally no humans ever gone before. So things do get tricky. But look for people who have honest track records. I think that's important. I think with us, we've been very fully disclosed about our track record. When we flipped our model, we had some problems, but good companies work through problems and produce good solutions in the future. And you'll find out a lot about a company by asking how they react to asking about their track record. Some will just flat out say it's not important. Stay away from that one. If they get into it and walk you through step by step what happened, and I can tell you this, every oil and gas company in the country has had problems. They have definitely had dry holes. They have definitely had poor production. They have definitely had successes, and they've definitely had failures. And me, as just being an entrepreneur for so many years, I learned that as a founder. As a founder, admit to your faults, and people will help. Say you have no problems, and no one wants to help you or give you money. So make sure they're honest about that. I mean, every oil and gas company will have blemishes on their record. It is a difficult industry to do. It's a necessary part of an economy. So make sure first and foremost for oil and gas, you should be looking for the tax advantage. That's the number one benefit of oil and gas in America is a massive tax deduction. Then you get income, and then with our company, you actually have a chance, and I'm guaranteed, but a chance if we sell that property for 2 or 3 times what we paid for it, that you profit from that as well. So if they're touting a big, 35, 45, 50% returns per year, I would probably avoid that or look deeper into it. Your standard returns in a good deal are going to be 8 to 15%. With high oil prices and high production, you can see 30, 35%. But we went through this exercise at our company. We lowered our expectations for our clients from 14 to 21% down to 8 to 12%. Because we were honest about our production. We didn't strike as large flush production as we were looking for. But that's why we have a tax deduction in this industry. It's part of the way that the tax law was set up, understanding it's a bit of a risky environment. They want to be able to make sure that you get some return through the tax benefit right away. But that's probably the best advice I could give to new investors in oil and gas is to make sure you do due diligence, talk to the team. If you're local, go see the company, make sure that they have a legitimate operation, but always look at the Railroad Commission. Many of these deals that fail are first-time deals, a new operator that has no track record on the Railroad Commission. That's a real big problem.
Eric, that's such a great piece of information. I'm learning so much. Could I ask you, you mentioned, I think people got hooked up on, what do you invest in, which is, I'm going to have some questions, but you just mentioned 3 ways you can invest in oil and gas right now. And would you just repeat those 3 for who missed it? Because I think this is crucial to understand. I know you said private deal and like, can you just briefly say, okay, 1, 2, 3, so we can have like a summary. I think this is great information.
Oh, sure. Sure. Yeah. The first way to invest in oil and gas is to invest in oil and gas companies through the public market. So you could invest in Shell directly, or an ETF or a mutual fund, a basket of energy stocks. The good news is there that it's easy, it's simple, it's liquid. That's important. But it's also complicated. So an oil and gas company could produce a ton of oil, but if it's $20 a barrel, they're going to lose money. Right? That's just a fundamental fact. And you're betting on the performance of a company, not the price of oil. The second way you can invest that's very common is mineral rights and land rights. So you would buy into the rights of a rancher or a landowner for future production where, like in a private deal, which is the third option, the private deal, you get a tax benefit, you get income, and with us, really us only, you get the benefit of owning the land lease, which will be sold at some point. Somebody will buy it. They're always being bought and sold. But with the mineral and land rights, you're still banking your operations on the operator, your investment on the operator. So I prefer the private route because I love the tax deduction. I hate taxes. If you've watched any of my podcasts, I know taxes are illegal constitutionally, but yet they're threatened upon us with jail time. So it makes us no different than living under the Roman rule of thumb in the times of Christ. It's really no different. And I think it's your patriotic duty to not fund a corrupt government. So avoid taxes the best you can, invest in domestic energy that produces oil for your nation and a brighter future for your children. So the 3 ways are public stocks, baskets of stocks, mutual funds, ETFs. The second way is land rights, mineral rights. And the third way is private drilling operations. So like King or some of these other operators out here, they offer a tax benefit, either monthly, quarterly, or semi-annual income, as well as the possibility of an exit. It's a 3-pronged approach versus a 1-pronged approach.
Yeah,
Does that
thank
make
you so
sense?
much. Yeah, thank you so much for that. So would it be safe to assume that most of the oil and gas investments that the brokers and anybody that you use that are raising money, they're more private deals without necessarily the rights? How would you know? And I don't want to kind of cut you off on because I know you have a trajectory, but how would you know, for example, you know, or where would you find mineral and land rights? That's kind of like an area that you don't hear much about. We hear about all these other minerals that we're investing. Volcanic ash is a big one for us, and all the other things. So we're my clients are always investing in all kinds of minerals like that. Um, Not so much land rights. So you know, is this something that is like where would you find this deals? Or that would be my one of my
But
questions
they're
on
hard to
that.
find.
Yeah.
Land right deals are hard to find. There's a few specialized brokers that go to ranchers and partition their land, and this is part of a digital movement that's coming up too. There, I would vote against it, but the world is trying to tokenize real world assets, turn them into cryptocurrencies, and that will be one of the uses that I find valuable. Is that you'll be able to buy rights to lands through a token online. The problem is security, easily stolen by the right type of hacker. But there are maybe about a dozen land right owners. Mineral rights is the most common investment in this type of space. Land rights generally are from, fourth or fifth generational ranches that are looking to sell partitions of their land. So some people will come in and buy the partitions, and then they'll take those mineral rights and include them with land rights. But land rights are very difficult to find. They're very difficult to find. I know one or two brokers that do it, and they have one or two deals per year, and they sell out in about 30 minutes because they are that rare.
Yeah, I could definitely see that. Because we have so much right now. I think the mineral rights have exploded in the last couple of years, and I think Utah, and some of that, like I think Oklahoma has some. Like Utah has like a lot of mineral in it, so we're using and capitalizing on it tremendously. Some of those states. So yeah, very nice. Well, thank you for that recap. Would you be able to talk a little bit more about the private deals? You talked about due diligence, which is a great thing. How would you know? Um, can you talk about, I know you talked about what's the standard return someone can expect. What's the time around? I think people get really scared when they go in and we say, well, for where you are in oil and gas would be a really good tax strategy. Could you talk just a little bit about how kind of like that first year deduction and kind of you switch from active to passive? I think people kind of like lose hope when that's presented and they just don't invest because they don't understand how is that possible. So, in a private deal, so we're going to probably talk more about the private deal oil and gas investments. What should they expect once they decide to make an investment? Like, how would that work? So people don't have this fear of, you know, I invest, but I don't know what I expect. I know the returns could be happening sometimes, and sometimes they're not happening at the beginning, depending how the drilling goes. And we have people right now who promise, they say, you will get a return because they said they're doing a horizontal drilling and they know for sure they will get oil. Now, things happen,
Mhm.
materials break down. But like, can you talk a little bit about that span of, okay, what you put your money in, let's say you put 100,000 in, what should you expect? Are you staying in that 3 years? What if you need the money in a couple of years? Can you talk about like what happens after you make an investment in this type of private deal in oil
Well,
and
it
gas?
depends on the deal. There's wide variance in the types of deals. The most common deal is a 1 to 3 wellbore assignment. So there is no exit planned. They may tell you that there is, but there's none. The exit is planned by the oil and gas operator. They plan on using your capital to increase the value of their lease and then sell their lease to another operator who will still honor your contract. That's the most common. So in general, private deals are 25-year deals. So you're going to invest in a private piece of land. They're going to drill on it, maybe these 3, 4, sometimes there's 5 wells. You'll get your monthly income based on the amount of sales that they have until the wells are finally tapped. That's generally how they work, which isn't a bad decision because there's no exit. If there's no exit, there's no recapture of the tax benefit. So that was the original structure and design of those. And then they brought in the 1031s into oil and gas. And now, like from our perspective, we shoot for 3 to 5 years per fund, where we want to build it up, acquire the land, develop the land, and divest the land in 3 to 5 years. But but that doesn't always go to schedule. You know, we may be 6-7 years down the road before we find real terms to sell the land, and that may be a break even, right? We don't know what that will be years down the road, but in general, it depends on when you invest. So if you're investing in the later stages of a fund, you should expect some sort of income in the next 60 days or 90 days. If you're investing at the very beginning of a fund, you've got to understand the operational procedures. So money comes in, you rent rigs, you get teams, you bring equipment out. You have to, in many places, you have to run your own electricity. So you've got to get a permit approval to have electrical lines run to your drilling operation. This could take 6, 9, 12 months just to get to drilling your first drop of oil. It is a big procedure. I mean, just moving a rig on a semi truck can take 3 to 4 weeks to go a few hundred miles, or a few thousand miles. So the process behind it, that's also a big part of due diligence. If people can explain this to you and say, hey, you're the first money into a fund, we can't drill until we get to 7 million to drill a well. That may take us 4 months to get there and another 6 months to be able to start drilling. You should be prepared for that. That's why the tax benefit's amazing. It really does kind of cushion the blow of the first, year to 18 months. After that, you should be expecting regular checks, because after enough capital has come in, enough wells are drilled, you certainly should expect something to come in. Projections are always wrong in oil and gas. I've noticed that with every deal I've seen, and with ours. So our projections, we projected things to happen faster than they did. We were very honest about that the whole way through. It's a very important part. But in the middle of it, you also have people using horizontal, right? So there are two ways that you can drill vertically: a straw on the ground, and you're going to hit one pocket of oil. So you have one batch of hydrocarbons you're going to extract. Whereas horizontal, you drill down into one basin and you drill across into 2 or 3. And then you actually put guns with bullets down in the pipe and you fire them off to create perforations in the piping and perforations in the rock so it seeps in, and then the pressure brings it up that horizontal tube to the surface. They are sort of correct in what they're saying. It's a 99% chance of hitting oil in a horizontal well. What I think they don't disclose is how expensive it is. You can drill a vertical well for $1.5 million on the cheap side, expensive side, 4 million. A horizontal could cost you anywhere between $8 and $14 million. So profitability has to come with that, and I've seen that in my short career in oil and gas. Some big expensive horizontal wells, they produced oil. You do get paid on it, but it's not as much as you projected. Other times you drill wells that are very cheap and you produce 10 times what you expected. So looking for a portfolio, and not just, we have these 3 target sites. If one of those 3 doesn't work out, the fund is over. I mean, that's just kind of how it works. So people working in multiple areas, drilling a portfolio of wells. So if one fails, it doesn't really matter that much. It always matters, of course, financially, but it gives you a little bit of a cushion to be able to say, well, we had a failure here, but we have 38, 45 other wells that are producing, and we can pull out of this well before it's completed and reapply the capital somewhere else and do another fund. So that is definitely a portion of it. But yeah, anyone touting guaranteed returns in oil and gas is a red flag for me. They are probable returns that are based on deep science and months, if not years, of geological research to be able to say there is oil there, and an engineering plan has been put in place that drastically reduces the amount of failure. But guaranteed returns in any investment for me, because it's horizontal, there's sort of a guarantee you'll get oil, but it doesn't mean you'll get a good return. So ask great questions to these folks. Ask hard questions. What does that mean? Horizontal, have them explain it to you, hitting multiple pockets of oil. But it does by no means you're going to automatically have 20-30% returns. There's a lot of work that goes into oil and gas. We have hundreds of people that work on each well, hundreds. And there's a lot of human error, mechanical error, electrical issues, weather, power outages. I mean, a million things can happen. So I would certainly look at oil and gas I got into oil and gas because I was looking at conservation easements for my own taxes, and which don't exist anymore. And they shouldn't exist, because all they were was a guaranteed pathway to an audit. Now, in today's environment, the only 100% tax write-off you have without having to do hundreds of hours of work as a real estate professional is oil and gas. But that is changing. There are certainly mining deals that are being put together for digital mining and physical mining that are offering tax benefits during these times, because we're so low on resources around the world. Is that a good explanation for you?
Yes, it is. And I think, we hear so much data, and, I'm trying to just make it so simple for the average person who is not necessarily, educated, how all the drilling happens, and they don't want to be necessarily educated. They just want to know, how to make a decision safely. How can they um, have that gut feeling that they know what they're getting into and they know what to expect, right? Because gold is so simple. Like there's no changing in gold. You got the gold, and we hear so much about gold, and we always have people having strong opinions about gold. But it's a very simple asset to hold because, once it's done, you have it in your hand. There's nothing that you need to do with gold, right? Oil and gas, for example, as an investment, people think, well, can I get out? Like, I think that's one of the biggest misconceptions that I hear from people is, well, I can take my money out whenever I want. Um, or, how do I get out of a deal? Because people, that's the biggest fear. And the reason why I say this, typically I see that and I'm not saying this in any way, the lower the income, in the sense you're $300,000-$400,000, the first thing that you get exposed to is oil and gas, because that's the only thing that will give you some relief on your tax return, right?
Right.
Like, and I had people arguing that oil and gas is really risky. Well, it is risky, and on the scheme of what could reduce your tax bill, when you're like a high, wage earner, or you're a small business that you're just producing a couple of $100,000 excess in cash, like oil and gas actually probably the lowest. And I had so many people say, what do you mean this lowest risk? Because the other ones are, we go into mineral rights, we go into entertainment and film industry. The risk goes higher as we go out. And you're not necessarily, entertainment is always going to be there, but it's not a physical asset necessarily, right? A movie can go south exactly the same way. Anything in oil and gas could go south. So on my list of risk, oil and gas is still one of the lowest ones for the people. And giving that, let's say the average kind of income I see a family or a person coming in oil and gas is when they start earning like $300,000-$400,000 a year. That's
Yep.
typically when they come into oil and gas. That's kind of like the average, right? And then they get used to it, and then they get more courage to go and invest into other resources and other things. But the first one we expose them is oil and gas. And the reason why I ask you, how do they get out? These people want to know that they can pull the money out. It's not like, my experience is that many of the people who are just starting investing before they go into this real estate and all of this on oil and gas, they want to know what's the trajectory, right? What are they going to do? So I put it in. Do I just hold it for 25 years? Like, what do I expect, right? Unless the landowner or the land gets sold, or you have like land rights or all the other. If there's no exit from the operator, what should they expect? I think that's one of the biggest pieces. People are still very confused.
Yeah, the closed-end nature of the private deals. I mean, that's private equity.
Yeah.
Public equity offers liquidity, right? That is literally the difference between private and public equity is liquidity. Now, risk assessment is something that, especially American investors, really have a paradigm shift coming. So most of our risk aversion, or what we've learned as risk, is correlated to normal times. We do not live in normal times, period. I said in 2001, I said, listen, we live in an alternate universe now. It's going to get worse. Alternative investments will become the norm. And I think I'm right. So what we look at, people will look at and say, well, I want to have liquidity. Well, everything is a trade-off. If you want a tax benefit, liquidity is not an option. There is no liquid tax benefit. That is the trade-off. If you want monthly passive income, liquidity, also a trade-off. I mean, with most oil and gas deals, liquidity is monthly, quarterly, or semi-annual. You're getting distributions from the sale of the actual oil and gas. That's a big benefit to it. Exit value. Look for a company that tries to exit that you profit from. That's why King modified its model, was to be more attractive to those who were looking for 3 to 5 year liquidity. But the problem is that we're not adjusting risk. I'll tell you what I think is the most risky investment in the world: Starbucks. I think it's the most risky investment over the past 3 years that we will ever see. When wages aren't increasing and prices are increasing, along with massive economic pressure and tax issues, anything involving the consumer is dangerous in recessionary, depressionary times. However, what you're talking about with the alternatives and entertainment and things like that, the risk with those types of models is you don't know who the buyer of the product's going to be. We have buyers for our product before we even pull it out of the ground. Commodities are always winners in economic downturns. Now, it may not be on an individual basis, but as a whole, commodities dominate during times of economic downturn and low consumer discretionary spending. Because regardless of whether or not someone has enough money to buy a Starbucks, they're certainly going to find enough money to put gas in their tank to go to work. That's a guarantee. So in times like this, I think it's important to adjust your risk tolerance to understand that the risk today, gold was risky, right? During the dot-com boom, gold was risky, period. Gold is risky. It's not as simple as you described it. You have to, number one, find a vein, extract it. You've got to separate the metals. Most silver comes from gold production. It's a byproduct of gold. You will find other minerals in there that make sense, but it's a very expensive refining process. And to be frank with you, 95% of gold miners don't make money. They just don't make money. It's barely a break-even business. Although I would say if you want to be smart and be liquid, gold mining stocks are pretty cheap right now. So are silver, platinum, and palladium miners. They're very hard to find. Good ones. You have to really find good operators. But at the same time, risk adjustment is a byproduct of macro conditions. So we've lived in an economy that's been a fantasy for 15 years. 0% interest rates, government lending and spending went completely under the radar, 2% mortgages. This has been a fallacy that we've lived in. The reality of the world is that mortgage rates have always been 6.5% to 7.5%. Interest rates have traditionally always been in the 5% range. We just have a 15-year run of free money. And during free money, liquidity was easy. You will see by August or September of this year, liquidity worldwide being a major issue, major issue. So I look at oil and gas as a great way to remain semi-liquid. So I'll put my capital in, I get a tax benefit right off the bat, which provides more cash in my pocket, less going to the IRS. And then every month with our deal, every month I get a check. And whether it's small or large, doesn't really matter. It's something liquid coming in. And eventually these properties will sell and we'll end up, getting our money back or a profit or somewhere near there. Because we don't know what the future holds. But liquidity is an issue. If you're scared of money being locked up, I advise people, if you're going to make any investment, it should be any investment, even if you're doing it to trade, it should be an investment that you're willing to part with that money for 3 to 5 years. You have to let it work. Money does not work overnight. That's also a fallacy created by day traders who 98% of them end up bankrupt. They tell you how easy it is to do. 98% end up bankrupt. So in the real world, the long-term macro perspective has always been to have your money in things that matter at the very center and the very core of an economy, which is commodities of all types, especially energy.
Yeah, thank you so much. I mean, we could talk about this for such a long time. I think you're hitting on some really good points. I know for the sake of time, I wanna start answering some of the questions that
Sure.
were posted in here, if that's okay. Leah says, Eric, are you concerned that if the current administration wins the election, they'll double down on banning, restricting hydrocarbon drilling, which will harm oil and gas investments?
Well, how honest do you want me to be on your webinar here, Laura?
Listen, I am like we're very aligned. Let's just say
Okay.
that. So we say it as it is because we want to. I would rather die knowing, enjoying everything I can, than live in a fantasy world.
So the reality of our last election is that was illegitimate. That's the reality. There are now 9 court cases from 2020 proving this. I think we're going to see real chaos from a geopolitical standpoint. I think that what we're looking at right now is more fantasy land. So the reality is, if they were, nobody's going to vote. Like, let's just be honest, nobody's voting for. I call him Mumbletard. That's my nickname for Joe Biden. Nobody's voting for this guy. It's dead people, it's illegals, and it's fakes. That's just what it is. If they win, if that happens to take place again, you need to worry very little about oil and gas. You need to worry very much about privacy, surveillance state, and complete tyranny. That's what happens. This is a historical repeat of every empire at the end of its era that's ever existed. Our government is right now burning and raiding the treasury, sending it to foreign nations and pocketing it themselves. This happened at the end of Rome. This happened at the end of every major empire in its fall. However, the reality of oil and gas perspective from a regime change from blue to red is very unrealistic in people's opinion as well. They keep well, if Trump's in here, he said he's going to drill, baby, drill, and oil will be so cheap and everything will be incredible. I agree. However, logistically, that's going to take a very long time. We now have 49 rigs not on the market. Those rigs cost $75,000 to $200,000 a day to drill. You still need money to drill oil. So if Trump came in and really wanted to solve the national security issue, which is what energy is, and remember, our SPR has 10 days left. We have 10 days of strategic petroleum reserve. We have to fill 300 million barrels to get it back to where it was. In order for that to happen, we would have to see massive government subsidies come into the private market to drill, which sounds good because it'd be essentially, tax credits or benefits to drill oil cheaply and provide a cheaper price to the world, but it also would create higher inflation because you'd have to print money to do that. So the economic web that has been weaved around America is extremely tight in a stranglehold. So the simple answer is if Biden wins, we'll be communist within 8 years. Like there's no turning back from the laws that they're putting in place. You don't have to worry about freedom or your money. It's gone. If Trump wins, we're still going to have major problems. You cannot wave a wand and fix what has happened. Yes, you could rebuild pipelines. Yes, you could subsidize drilling, but drilling is still risky no matter how you put it. It's not like a guarantee. So the government will be burning money. You'll be investing money, burning money, getting towards that point where we could be energy independent again, which by nature, last time we became energy independent took every bit of 3.5 years. So there were 3.5 years of high prices built in there. The best thing he can do right off the bat is eliminate state and local taxes. Like in California, your gas should be $3.25 right now, but you're paying $7.50, and all of it's going to your corrupt government. So the real problem is not the production of oil; it's the procurement of real money, and it's also the reducing of regulations that stranglehold not only the consumer but the producer. Our PPI indexes, our inflation for producers is higher than it is for consumers. And people don't pay attention to the producer, the PPI. That is really an indicator of a falling economy when it costs more to produce an item than it does to buy it.
Absolutely.
Big problem
Absolutely.
there.
Yeah, absolutely. Listen, and you just nail in the head because we keep telling people and we're kind of talking about the same things. I was born in a communist country. And that's how it begins. And people don't realize the story that is not being told. It's just
Mhm.
being dictated on you. And, it's just sipping in very, very slowly until you literally are like you have no ownership. And that's how it began. It began as a great idea. And and I was sharing at the beginning that I was in San Diego and we heard this Beatles song, John Lennon song, and it's like, I mean, it doesn't work. And I was telling people it doesn't work. And they were fighting with me that it does work. And I'm like, listen, it does not work. You think it works. Like we're living proof it doesn't work. And to get out of that mindset, you need generations, not generations to go and just literally get wiped out to be able to get out of that communist regime. So I
Well, and
think
think
it's
about where
that.
we are from a,
Yeah,
a, a
yeah,
societal standpoint, right? Like
yeah,
the educate. So I do a podcast on all this stuff. I have trained with counterterrorism teams, generals who have faced communism. I've learned
yeah,
quite a, and it all begins with the mind. So,
absolutely.
starting in 1960, when you remove the Bible from schools, you give people nothing to believe in, and you just go generation after generation of hedonism. And now we actually have our youth that are trying to defend one side or the other between, Islamic jihadists or Zionists who are communists. Like we literally are cheering for both of the bad guys and eliminating cheering for ourselves. Like that. That is how Cuba fell. That is how Venezuela fell. That is how the USSR fell. That is how they all fell. Like people aren't really taking that in a high enough regard that communism, we already have 5 members of Congress who are actual registered members of the American Communist Party. We have 11 jihadists that are
Yeah.
in Congress. We have
Yeah.
20 million people in this country, 70% of which are military aged men, and we do not know why they're here. So
Yeah.
yeah, if Biden wins, we have much bigger problems than your investment in oil and gas. I promise you that. If Trump wins, we have a pathway to financial
Yeah.
freedom, though it's not guaranteed because there's still a lot of corruption to get through. But I do see Trump being, for the first time, the person to drop all the regulatory and cost structures around energy to be able to make us energy independent again over the period of maybe 3 to 4 years.
Yeah. Yeah. Thank you. Thank you for that. So another question I have here is the investment in oil and gas drilling deduction considered NOL for taxes? Yes, it is. I would say, the oil and gas, because of the benefit that it has from a tax perspective, typically you're trying to reduce your individual income tax. So this is the type of investment that you don't invest in your LLC, you don't invest in your IRA necessarily. This is an investment that you typically do individually, either you, your spouse, both of you, all of that. Let me ask you a question, Eric, on this. Is there an age limit for the oil and gas drilling? Do you have to be 18 and over to invest in oil and gas?
That's a good question. That's never come up for me.
I
So
know, I just thought of it.
I don't know the answer to
Could
that.
you
I
put in
think
your
it's,
kid's name if you want to?
well, I
But
mean,
they don't have, yeah, they don't have investments to write off. But let's say they
correct.
do, you do, because a lot of people are investing right now. They're trying to shift income from themselves to the kids because they're trying to drop the estate, like, the level of the estate when you,
The estate tax
the
prime.
subject that, yes, that's exactly what it is. So if it's dropping as they project they will, people will shift income to their kids and grandkids like very fast. It will be a very shift of in income, and in which case you will have a lot of minors having this income and have the kiddie tax and all this other things come up. And I would think an oil and gas deal investment in a kid's name will wipe all of that kiddie tax. Would that work or not really?
Well, you're the CPA. I have no idea that for me that's a whole new thing. But I do see commonly people make an investment through their personal name, and then they assign the contract for the investment to an LLC afterward.
Yeah.
I see that quite a bit, an asset assignment, but I've
Yeah.
never been
The
involved
kids.
in the kiddie tax.
Yeah,
Yeah,
that would be
it's
interesting. That
new
would be
for me.
interesting. Yeah, that would be interesting to see. Because listen, I have three kids that are under 18 and they'll be under 18 for a while. So, looking for ways. Okay. I think we answered that one. Another one, Leah says, Eric should explain how King pivoted to add JVs on producing wells to help early cash flow to investors. And King has a lot of expertise in relationships to be able to pivot to beneficial opportunities.
Yeah, that's a big part of oil and gas. So when you get a piece of land, like our piece of land in Borden County, really good piece of land. We drilled 5 wells. 4 of them were producing but disappointing. One of them we have to go uphole. So the original pocket we shot for produced nothing but water, but we can go uphole and get more oil. But at that point in time, we had expended all the cash we wanted to that we allotted for that piece of property. So in oil and gas, it's very common. So we have about 28 other drilling locations that are geologically vetted. So what we'll do is work with another operator. They'll put up the money to drill a well for their portfolio, and we'll take a percentage of it. And when those wells weren't producing in Borden County at the number we were looking at, we started allocating our cash from our fund into companies like ConocoPhillips and Choya, which have much better land, $20,000 an acre land. And everyone needs money to drill. It's very expensive. Your wells cost between $1 million and $15 million, depending on the type of well. So yeah, we joint venture all the time to try to balance things out between exploratory and producing. And exploratory can be an area of the world you're going to want to pull your hair out. It just is. You might spend $6-7 million on a well that produces 30 barrels. That's what exploratory work does. So you offset that by bringing joint venture partners to look at other opportunities on your land or allocating capital to proven land that you're going to get a good return, and those companies don't want to put up any extra capital, so they're happy to joint venture and share in the risk and the profit.
Yeah, that's great. I love the way you strategically kind of move pieces around to make sure the investors are being taken care of. And I think that's what gives them confidence to invest with King, operating right now. So another question, are the tax advantages, deductions of oil and gas applied to W-2 income?
Yes.
And it says, are they also applied to capital gains in stock? So what happens, remember I gave you the example at the beginning, you have 100,000 in wages, you have another 100,000 from your business, you have 200,000 in income. All of that will be reduced. If you have capital gains, it will reduce that overall income as well. So it really reduces the entire taxable income, oil and gas, which is one of the few investments. And that's why I wanted to kind of have this conversation with Eric, because he's so honest about how this works. It's one of the few investments that would actually give you a write-off. Remember that write-off. You have to ask when you have, because I see so many oil and gas deals, but they're not in the first year and they will not give you the write-off. So if they're gonna, we call it intangible drilling costs on the tax returns. And if they don't have high intangible drilling costs in year one and you don't have active participation, you cannot offset that. So on a tax return, you can have a maximum, like 85%. So, you have, every dollar
90.
that you
Yeah,
90,
we got
90.
90
So
last
90.
year.
So yeah, rarely we get 90, but like we see anywhere from like 60 to about 80, 85%. That's typically what we see. So what you got is really amazing. It's a super deal. So that means every dollar that you put in, right, it's going to offset 90 cents, that 90 cents to dollar, like on the tax return. So let's say you have 200,000 of income and you put $100,000 in an oil and gas deal, you literally would have $90,000 reduced income that's taxable. That means you will only pay tax on 110. Okay. So that's a
Right.
great deal. So I hope that answers your question. And I'm going to speed up because we have a minute left. How often do the deals from King become available? And is there a minimum investment? And I'll add to this, do you have to be an accredited investor? Because that comes up a lot as well.
Yes, yes, and yes. Yeah, so we're accredited investor only. We right now are in the tail end of a $200 million raise. We're at about 177 million this morning. So there's 23 million left, which isn't a lot, but it's also a lot at the same time. 23 million is never a small amount of money. But at the same time, as soon as that's done, generally a couple of months after we close a fund, we already have properties for another fund behind it, but we're not really pursuing them. We've got a lot of work to do to get better returns for our clients right now. So we actually delayed the launch of a new fund by about 6 months just to make sure we can get enough work in. But in general, King's had a fund going for 25 years pretty consistently. So there's always one available. And that is the beauty of oil and gas is it's active, passive, W-2, and 1099. It works against AGI, so which encompasses all of it.
Yeah.
And I saw the guy with capital gains. Capital gains taxes, there are other funds, there are Bitcoin mining funds out there that offset capital gains. So there's definitely other things out there I'll be happy to share with you.
Yeah, absolutely. Okay, so there is another one that came in. What amount in types of communication do investors receive from King Operating? Weekly, monthly, quarterly?
All of the above. Yeah. So when I got here, we had our team was doing investor relations while we were trying to raise money, which is kind of a lot to do. So I actually helped structure and build in an investor relations team within King. We now have a full-time 24-hour a day operational portal. So your investment and all your statements and all your documents are stored 24 hours a day, full access. We do a monthly newsletter from the company. We also do a weekly well report. So the good, the bad, and the ugly from the field. There is ugly. That's another thing to look at. Sometimes you have to close wells because the state says you have to close wells for a week for some purpose that we don't know about. So you get regular spontaneous updates when we get radical changes that need to be made. We have a QBR on video. So we do a Zoom with all of our investors every 3 months where you can see our face and we give you a breakdown of the fund and where we are. Most important to me has in the 10 year I've been at King is building in traditional investor models to be able to have. I've been raising money a long time, and oil and gas just doesn't really have a whole lot of investor relations from what I found. So we built a portal. We do a weekly and a monthly newsletter. You can reach anyone at our company. There's someone who will call you back that day if you have questions. So yeah, we're pretty well aligned there. It took about a year and a half to build that, but it was definitely worth it for our investors in the end.
Yeah, that sounds like the CPA in the accounting world. I'm just there's not a lot of relationship, and communication is always a struggle because that was just me speaking for a moment, the accountant in me. Another question. I'm looking at the chat, and we're wrapping up, guys. Just trying to make sure that everybody's questions are being answered. Thank you so much, Eric. This is so valuable. I love the honesty and the transparency that you offered. For all of us, like a wealth of knowledge and a wealth of just really tidbits of information. And hey, perspective is really what I love, because that really solves, if you change your perspective, you see everything differently. And
right.
many times if you look at investment with a different perspective, you just put different glasses on, that investment sounds completely different in literally in a 2 minute span, right? So I want to say thank you so much. I really appreciate you being here. If that's okay, to go just a couple of minutes over, guys. There are
Sure.
just a couple of more questions I want to answer. So Alex said something. You mentioned VIX. How do you spell VIX? And if you say,
VIX.
if you can, VIX. And what is it?
VIX. Yeah.
Yeah, what does it stand for? Alex is asking.
Oh, it's the volatility index. So it's a way of predicting volatility in the market. It's at its I think 10-year low right now. So you have to have a commodities account opened up to do it. You can't buy it on E-Trade or anything like that. But if you have a commodities broker, I'm not going to make a recommendation. I am buying the VIX because I believe massive volatility is coming. And I've watched the VIX go from $25 down to $11, back to 18. It is volatile on its own, but it's a predictor of market volatility moving forward. And I think it's very undervalued now.
Yeah, thank you. What is the best way to invest in silver or gold?
That depends on who you're talking to. In general, the average investor thinks, well, I'll go buy the ETF, gold ETF. Well, that's paper. I'll be honest with you, the gold and silver markets have been pillaged. Understanding the history of money and how it works, like the Romans made gold and silver coins, but by the end of the Roman Empire, they were made with lead and copper, and the emperors stole all the gold. Well, the same thing has happened in the paper markets for gold and silver. The best way to have gold and silver is physical and get it tested and assayed. So go to a licensed bonded broker, excuse me, buy your metals. If you want to store some at home, store some at home, but look for private repositories. These are safe houses and that store your gold. There are international ones you can use as well. I try to keep one local to me so you can't steal it from my home. But at the same time, it's safeguarded with full-time security in a vault. But buy it physically, get it tested. There's a lot of fake gold, a lot of fake silver out there. And when we started seeing the silver squeeze and the rush towards silver 2 years ago, I personally bought about $1,000 in silver that ended up all being fake. So I get everything tested. They do it for free. Licensed bonded gold and silver brokers. Buy the dips. Every time you see it drop, you can go in and buy physical gold. Do not buy paper gold ever. It's the world's largest Ponzi scheme, and it's not a conspiracy theory because they just arrested and convicted 20 JP Morgan traders for manipulating the paper gold market.
Wow.
So
Yeah, that's gold in itself, what you just shared right now.
yes.
What is the time frame between acquiring a lease and drilling to completion?
On the first well, in general, you'll acquire the lease. Then you have access to a lot of the information that comes with the lease, old geological studies, new studies. You're generally looking at about 6 to 8 months before you start getting into oil production from that point. But in general, the leases are acquired before a fund is launched. So generally, it speeds that process up by about 2 months. But I wouldn't expect in a new fund any production for at least 6 to 8 months, just to give a good expectation.
Yeah, very good. Well, I think that's going to be it. And thank you so much, Leah and Donnet. You were kind of monitoring here and answering some questions in the chat. Thank you, Jackie and Sochil. I see your comments in here, and Paul. Absolutely, Eric was extremely honest and transparent, which I absolutely love that. It's not about being, my opinions and views, being born in a communist country are always going to be different than someone who grew up with all the liberties, right? And I'm not necessarily, my political views are not going to transpire in the conversation that we have. I think politics in itself, it's always going to have like a bad side. I mean,
Distraction. Even George Washington told us that a two-party nation would fall apart. Like it's just a
it
distraction.
is. It is a distraction. So, what I want to conclude with today is I want us to really, kind of believe that we can help each other. It's not, we don't have to step on somebody else to get to the top. And the reason why I'm doing this call is the reason why we're really trying to educate everybody is you have access to this information. You have access to people. Eric, if somebody wants to find where you are, if you want to share that with us, that would be great. And you have access to the information. Look it up. Listen to your gut feeling. Hey, is this something good for me right now? Talk to your CPA if you have one. If not, you can always reach out to us. Like, make sure that you understand, how does it affect you, and how do you build that efficiency and you build your wealth around whatever's going on in the economy and the United States, whoever gets elected in the end. So, Eric, if you want to have just a couple of last words, and where can people find you if they are interested to find out what you have to offer with King Operating?
Yeah, for King, you can go to kingoperating.com. We have, a form you can fill out there, and then one of our senior vice presidents will get back to you and help answer any questions that you have. We're not salesy in any way. We want to walk you through everything that you need to understand everything. I think it's so important. Many people make decisions without proper research or explanation, and then when things go sideways, they get very upset. Things are going to go sideways in oil and gas. It's always going to happen. It's a difficult thing to do. So make sure you have a good relationship and an education. You can go to kingoperating.com. I just put my podcast on YouTube. I'm on everything, YouTube and iHeart and all that kind of stuff. Just relaunched, so I'm not a big player. By the way, what I'm telling you is true because every time I get to 1,000 views on YouTube, they reset me down to 622 every time. So I will
Wow.
continue to speak the truth there. But the link is in there if you want to subscribe to that channel. I start filming again next week. But about the King deal, just reach out on the website, let them know you were on this webinar, and we'll put you in touch with somebody right, in either that day or the next day, and start answering questions and getting you as much information as you need.
Yeah. Well, thank you so much. Again, if you guys have anything, let's just say thank you to Eric for such an amazing kind of, perspective and overview and how the markets are looking and what should we look at. And listen, let's not go out with a pessimistic view because there is hope. Like as long as we are, holding on, you just have to understand that times are changing and we just have to shift our mindset. What do we need to do to shift with the times? So I don't want you to leave in a very pessimistic, oh, we're all doomed, and the economy is gonna, go down and the government's gonna take all our assets. This is a shift that's gonna happen for the next, maybe 5-10 years. It's gonna be a slow or, fast shift. But I really want you to focus on what can you do for you and your family today? Like, what do I need to do? Number one that you could do is lower your tax bill as much as possible so you can put the money in the place that you actually believe in. Invest the money where you feel that you will build more leverage, you will build more wealth for you and your family, right? So think about that, not stepping on anybody, but just really kind of step back and what can we do? It's a great day to be alive. Listen, every day above the ground is a great day. So I want you guys to be super
Can I add to
optimistic.
that? So
Yeah,
I do give the facts, which are not good,
yeah.
but no one ever asked me my view. I think all the things that are happening have to happen. I am a man of faith. I believe God has a plan. I believe through all the
Mhm,
chaos, God is writing a symphony. And I
mhm,
think that at the end of the day, central banks, money printers, these things were not known to humanity. We've been enslaved by a central bank since 2013, and now everyone knows, which means it's going to go away. And when we get back to sound money principles in this country, I think that we'll experience a life that we have never even imagined before. Because we live in a very corrupt world. If you can print money out of thin air and then collect taxes from people, you're being robbed. And that is actually boiling to the very, very, very surface of most people's minds, which means that it's going to change. So talk about these things with other people, enlighten them, educate them, read books like The Jekyll from Creature Island. If you have not read that book, you need to read it. And I'll be quite frank with you, try to, as best you can, read a book called The Bitcoin Standard. Read The Bitcoin Standard. Buy it, read it, learn it. Sound money is coming to this world, whether it comes through a government or through private organizations, and it changes a lot. But we're going to have to walk through hell to get to heaven. That's just the way life has always been. So keep your head up. Get your
Yeah,
money in the
yeah,
right position, you'll prosper. The
yes.
greatest
Very good.
transfer of wealth is coming.
Yeah, absolutely. Well, thank you so much, everybody. I hope you have an amazing day. There's just a couple of days left in this week. Enjoy it. Thank you all for joining. Thank you so much.